Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. With interest rates starting to decline, investors are starting to turn their attention to real estate investment trusts, or REITs for short, like Brandywine Realty Trust. They're traded on New York Stock Exchange under symbol BDN. High interest rates are not good for capital-intensive sectors like real estate. That's because REITs need to borrow a lot of money to expand their portfolio. On top of that, high interest rates make it more expensive to borrow and service debt, which cuts into profitability. But with interest rate cut expected to continue in 2025, REITs will begin to see their financing costs decline and hopefully their margins expand, which could result in higher dividend payouts. John?
Yeah, thanks, Mel. Yeah, Brandywine Realty Trust is one of the largest publicly traded REITs in the United States, with a core focus on urban, town center, research and lab space, life science and transit-oriented properties in Philadelphia, Austin, Texas, and Washington, D.C. markets. Now, since its founding in 1994, Brandywine has grown from 200,000 square feet and a total market capitalization of less than $5 million to over 22.3 million square feet and a total portfolio worth somewhere in the range of $5 billion.
Looking at numbers, I was reading on Income Investors that it reported another strong quarter.
Yeah, for the second quarter ended June 30th, 2024, Brandywine reported net income of $29.9 million or 17 cents per share. Now that's up from a loss of $12.9 million or a loss of 8 cents per share in the second quarter of 2023. Now funds from operations, $38 million or 22 cents per share compared to $49.6 million or 29 cents per share in the same period last year. Now, the second quarter 2024 payout ratio on the dividend was, which we'll get to eventually, 68.2%. And you get that by dividing the 15 cent per share payout by the 22% funds from operation. That works out to 68.2.
And it narrowed its 2024 business outlook.
Yeah, for 2024, Brandywine currently expects to report per share guidance of a loss of 1 cent per share to actual earnings of 4 cents per share. And that's a big improvement over previous guidance of a loss of 36 cents per share to a loss of 29 cents per share. Meanwhile, funds from operation guidance narrowed to 91 cents to 96 cents per share, and that's from 90 cents per share to 97 cents per share.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, let's talk dividends. What's happening here?
Well, thanks to Brandywine's solid earnings, rental rate growth, occupancy rate, and strong tenant retention rate, it's able to provide investors with a reliable dividend. Keep in mind, too, that as a REIT, Brandywine is legally obligated to distribute at least 90% of its taxable income to shareholders as a dividend. Now, what does that look like? In May, it declared a second quarter cash distribution of 15 cents per share, or 60 cents per share on an annual basis for a current yield of 11.15%. Now, as previously noted, the payout ratio for the second quarter was 68.2%, so we know the dividend payout is at least safe.
BDN stock performance is solid, 31% over the last 6 months.
Yeah, Brandywine stock fared poorly during the period in which the Federal Reserve raised its key lending rate. For example, from March 17, 2022 through July 26, 2023, the Federal Reserve raised its rates 11 times to a final range of 5.25% to 5.50%. Now, over that exact time frame, BDN stock tumbled 56.5%. Now, BDN stock has since rebounded on investor optimism about the economy, inflation, and lower interest rates. Now, over the last 6 months alone, BDN stock has rallied 31%. More broadly, BDN stock is up 22% over the last 3 months, 10% year to date, and 26% year over year. Now, looking ahead, Wall Street analysts believe Brandywine stock will outperform the broader markets over the next 12 months with a median price target of $6 per share.
John, thank you so much for your insights. Brandywine Realty Trust is a great REIT with an enviable property portfolio in 3 of the most sought-after metropolitan regions in the country. It has a strong balance sheet, growing pipeline, and a strong occupancy rate, which allows it to provide investors with reliable, high-yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.